Hi everyone, it is Đức here, your course coordinator. Let's help you to recap what we have learned so far in Chapter 1, Assurance and Auditing, an Overview. As the title, it is an overview, so we'll look at a different concept. Right, here are the 6 learning objectives. The keyword for these 6 learning objectives are framework, define, auditing, fundamental, principle. Alright, reasons giving rise to demand for assurance, learning objective 3, expectation gap, learning objective 4, auditing standard, learning objective 5, and the last learning objective, assurance function. Alright, now this is the flowchart of our course. The course is divided into 5 sections, which part 1 is an overall of the auditing and assurance services profession. Right? We cover this one in 3 weeks, week 1 to week 3. From week 4 to week 12, we cover the whole process of financial report audits from the beginning, like planning and risk assessment, through the execution phase, and then go to the part 4, completion and communication. This will happen in week 4 to week 9. In the last 2 weeks of the semester, we look at part 5, other assurance services, and we will have guest speaker for the 2 topics, internal audit and social audit. Now, this is the framework for assurance engagement, right? I want to jump to the definition of engagement, because when you need to understand what is assurance engagement before you are able to understand the framework. So, pause here and have a look at the definition. Tell me what are the keywords. Now, I guess you have stopped and start again the video, because now you can tell me that the keyword in this assurance engagement definition is practitioner. Alright, sufficient, appropriate, evidence, conclusions, confidence, intended users, underlying subject matter, criteria. I'm going to explain each of them in the next few slides. Now, this is a figure to tell you about the parties to an insurance engagement. We'll look at that in the next second. Now, this is one of the review questions in your lecture. What are the 5 elements of assurance engagement? We know that the first element is there must be 3-party relationship. And 3 parties are auditor, assurance practitioner, responsible party, preparer, intended user. So, do you see these 3 partners appear in the assurance engagement definition? Yes, they are. Yes? Alright, now the next one. Alright, underlying subject matter. Criteria, sufficient appropriate evidence, a written assurance report. Let me give you example. We're talking about financial report audits as one assurance engagement. So, to perform financial reporting audits, you have the 3 parties. Yes? Alright. Underlying subject matter is the financial reports, the financial statements. Criteria is the reporting criteria. Alright. So, in Australia, we adopted International Financial Reporting Standard, IFRS, right? So criteria is the IFRS. Sufficient appropriate evidence to provide assurance, the auditor need to obtain the evidence. So on the testing result outcome, this must give them the sufficient appropriate evidence. And a written assurance report is the audit report, audit opinion itself. Alright, why there is a value in assurance service? Why the auditor get paid to provide opinion? Because 2 things. They provide with them independence and expertise. Alright, expertise. What does it mean? Expertise allows the auditor to have professional judgment and professional skepticism. Alright. There are 3 types of assurance engagement. The highest level is reasonable assurance engagement, and we also call as audit engagement. The second lower level of assurance, limited assurance, are commonly called as review engagement. And the last one, with zero assurance, that is a open procedure engagement. Right? The company can ask the auditor to perform the work open whatever the company wants, but the auditor will provide no assurance at all. Right? So, if I put it in my own language, audit engagement is a type of assurance engagement. So if you compare orange and fruit, so right, orange is audit engagement and fruit is assurance engagement. Or in some country where Honda is the very famous brand for motorbike, right? So in some country, for example, like in Vietnam, when people say, do you have Honda? How is your Honda? They mean, do you have a motorbike? How is your motorbike? Right? So sometimes assurance and audit was being, referring to each other. Right? Now, in the next 2 slides, we will look at the comparison between reasonable assurance and limited assurance. And to remind you, reasonable assurance is audit engagement and limited assurance is review engagement. Alright, in slide number 13, we look at the 2 different concepts, attestation and direct engagement. Right, I give you 1 second to read the slide and I give you example. So please pause here. Okay, let me give you example. If the firm the auditor is required to perform financial report audit, right? So who prepared the report? Who prepared the underlying subject matter, which is the financial statement? That is the company, right? So the company audit is preparing the financial report, right? Assurer is the auditor, right? They again evaluate the financial statement report against the criteria, which is international accounting standard, and they apply their skill and their technique to obtain sufficient appropriate evidence, right, that the financial statement report is true and fair, or represent a true and fairness presentation, right? So attestation, the audit engagement is the attestation engagement. But where, right, if the company is asking the auditor, can you measure for us about our performance, about, our green gas house, how much carbon emission that we have generated, how much harmfulness that we have, prevent, right, to put into the environment. And then that means the auditor have to directly measure, right? And then that is what we call is the direct engagement. I hope it's clear. This is on slide number 14. Is the definition of auditing that has been provided by American Accounting Association, right? So pause here, have a look, and tell me what are the keywords in this definition. I hope that you have listened to me and pause and now restart. So the important parts of this definition is showing in slide number 15. Systematic process, objectivity, obtaining and evaluating evidence, assertion, alright, degree of correspondence, communicating result. Alright, in all these important parts of the auditing definition, I think the most difficult to understand is assertion. Let me put it this way. The assertion that we will look at more in Chapter 5, Chapter 4, completeness, accuracy, assistance of the revenue, the completeness of the debt, the liability. They are the financial assertion, right? We will look at more in the next few chapters, so don't worry for now. Now, in the slide 16 to 18, we have looked at the fundamental principle underlying an audit. To understand the evaluation of auditing as the discipline, it is important for you to understand the principles that have dictated to such developments. Right? You are the future of the auditing profession, so you are expected to be comfortable with these principles and understand when you work within the profession. So the section here include the different fundamental ethical principles and fundamental auditing principles. There are four ethical principles that are commonly appear in the Australian or International Codes of Ethics. Number 1, integrity. Number 2, objectivity. Number 3, professional competence and due care. Number 4, confidentiality. And number 5, professional behaviors. There are 10 fundamental auditing principles that have shown on the slide number 18. Right. Knowledge, responsibility, quality control, rigor and skepticism, evidence, professional judgment, documentation, communication, association, and reporting. If you want to know more about the definition of these principles, you can look at in the books of page 17 to 18. Slide number 19 highlights the fundamental characteristics of accounting information. They are relevance, faithful representation. Alright, the accounting information also need to be comparable, verifiable, being reported on time, their timeliness, and be understandable. Okay, we have also discussed about why the demand for assurance never ends. Because there is a conflict of interest, right? The manager may have a different interest with the intended user, with the shareholder, right? Then the user is based on the information from the financial report to make their decision, right? The level of complexity in the financial reports that not every user can have expertise, can understand the information presented to know that whether has been presented right or wrong. And also because, right, the user is from around the world, right? It's separate with the owner, so the user will not be able to obtain access to the information to check it. So demand for assurance, the user will need a third party, independence, and have expertise to help them to provide them a confidence in the information being provided. Okay, as the video should be short, so I stop here and I see you in the next video to explain about hypothesis of demanding for assurance. See you.